Trading futures can be a scary step for the novice trader. Yet futures can be profitable instruments to trade, and most traders will consider entering the futures market at some point. In this video, I will highlight some of the benefits and some of the essential need-to-knows so that you can get started trading futures. A futures contract is a standardized agreement between two parties conducted via a futures exchange to buy or sell an asset on a specific date or during a specific month. Futures can be broken up into the major categories of stock index, currencies, financials, commodities, and metals. Futures were initially created for hedging. For example, fund managers use index futures to hedge against a portfolio declining in value. Airlines use oil futures to forecast their future costs of business. Importers and exporters use currency futures to lock in exchange rates. And similarly, lenders and borrowers of money use interest rate futures, and producers and manufacturers use commodity futures. Yet futures are also available to the speculator to profit from the changes in price during the life of the contract. With any futures contract, there are basic contract specifications which we need to know. You can go to the exchange website to find these specs. Two valuable websites are cmegroup.com and in Australia, asx.com.au. Firstly, with futures, you need to understand which contract you are trading in. For example, wheat has contracts that expire in March, May, July, September, and December. A rule of thumb that varies depending on the underlying you are trading is to never trade in the expiry month. Secondly, you need to be able to convert the tick value to dollars. For example, when the price of wheat moves a quarter of a cent, this equates to $12.50 US. Or put more simply, a 1 cent move equals $50. A third thing you need to know when trading futures is the margin. Margin is a bit like a holding deposit and is sometimes called performance bond. Your broker will take the margin from your account whilst you have a trade in place and return it on completion of the trade plus any profits or minus any losses. To find out the margin, you can look it up on the exchange website or ask your broker. The following table can be used as a guide for finding out more about your chosen futures contract. Items such as what hours does it trade can all be found from the exchange website. This basic introduction is aimed at helping you get started with trading futures. If you are looking to trade leveraged instruments and profit from some short to medium term trading in strongly trending markets, then futures might just be for you.